Westfield Group, the world's largest owner of shopping malls, slumps to a loss this morning. This after U.S. consumers cut spending, forcing the company to write down the value of its assets. Still, Westfield shares rose as much as 4% after the first half report. Joining me now on the line from Sydney is Peter Lowy, Group Managing Director at Westfield Group. Peter, how do you feel about these numbers?
Well, it's Linda, we're actually quite comfortable with the numbers. We think that the result that we put in the first half was very solid, considering the operating conditions that we've been operating under this year.
And you're saying that your balance sheet is strong?
Yeah, well, when you have a look at it, we have a 34% leverage ratio. We have some $7.5 billion of available liquidity, and that leverage ratio is after the write-down that you mentioned of the assets that we hold, and that write-down was some 5% of the value of the assets. So the balance sheet is in a very strong position for the company moving forward.
And Peter, you cut dividend payout ratio, though. Is that expected to continue? Do you see that happening again?
Well, what we've done is we changed the payout ratio starting in 2010, and that when you look going forward at our capital needs for the capital that we're spending on our development program, that's approximately some $1 billion odd a year for the next 2 or 3 years, that the change in the payout ratio will allow us to retain some $500 million a year of earnings that we can invest in that development pipeline so that we can generate the capital internally for the future developments.
Hey, what assumptions are you making about consumer spending in Australia?
Well, consumer spending in Australia has been quite strong, as you can see from our results, and we see that for the rest of the year that we don't see any major slowdown in consumer spending in Australia.
But what do you make of the recovery, though? I mean, we heard from RBA's Cobbett earlier, the Australian consumer recovery. Your take on that, 6, 12 months down the road?
Well, we've been looking at a very solid consumer base. We think the economy is very solid as well. And while the government stimulus payments were made earlier in the year, we are still seeing some underlying strength in the economy from the consumer as those stimulus dollars have run down.
Big write-downs in values of assets last year. When will asset values improve?
Well, we actually set out on our call today that we think that with the strong growth in Australia in our business, and with the stabilisation we're seeing in the United Kingdom and in the United States, that we think asset values have probably bottomed out here and should stabilise from here on in.
Peter, before we let you go, we hear that Westfield has received commitments of more than $1.4 billion for a $1.25 billion loan. Truth in that? I mean, and are the investors coming from Asia?
We are getting Asian banks in our global syndicated facility. We have some 6 new banks, which the majority have come from Asia. And that facility replaces one that rolls over in January of 2011, and we've now extended it through to August of 2012.
Is there a need to raise more money in new equity? After all, your properties are likely to be devalued, and that will raise your gearing.
Well, I'm not sure about the devaluation and the gearing, but we're very comfortable with where the balance sheet is now. We made an announcement on our call that we will not be raising equity here. And with the capital commitments going forward and the opening up of the credit markets, that when you look at our forward capital needs, we believe that we can fund them easily from our own sources.
How's your UK business looking? I mean, you're building a large retail complex in East London, which is the focus of the city's Olympic plans. How will that investment pay off?
Well, that will be a very long-term investment. We think that the mall that we're building in Stratford, which is the gateway to the Olympics, will open in about 2 years' time. We have good, strong demand from the retailers for that development. A lot of those retailers opened up in our site in Westfield, London, that we opened up last October, and they're trading very well there. So we think that everything is on track for a very profitable investment in Stratford.
All right, sounding good. Peter Lowy, Group Managing Director at Westfield Group, joining us here on The Trade.